Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Ain Fatima binti Fauzi and my matric number is 04 DPR1B-INTRODUCTION. So now we want to discuss about introduction to accounting process and books of account. The function of regulatory bodies in Malaysia we have four. The first one is Malaysian Institute of Accountants (MIA). Secondly is Malaysian Accounting Standard Board (ASB). Next, the Companies Commission of Malaysia and the Inland Revenue Board. The first one is the Malaysian Institute of Accountants (MIA). What's the meaning of MIA? MIA is a statutory body responsible for regulation the accountancy professions in Malaysia. Here are some functions of MIA. So the first one is regulation and monitoring. MIA regulates the accountancy profession by setting standards and ensuring that accountants comply with laws and regulations. Secondly, professional development. It provides continuous professional education and training for accountants to maintain and enhance their skill. Besides that, the function of MIA is enforcement of ethics. MIA promotes and enforces a code of professional ethics to ensure integrity and accountability in the profession. Last but not least, the function of MIA is public interest. It works to protect the public interest by ensuring that the services provided by accountants meet high standards of quality.
Okay, next is function of MASB. What is MASB? MASB is the Malaysian Accounting Standard Board. Okay, the Malaysian Accounting Standard Board is responsible for developing and promoting high quality accounting standard in Malaysia. So, here are the functions of the MASB. Okay, first, setting accounting standard. MASB is responsible for issuing and reviewing financial reporting standard and known as Malaysian Reporting Standard of MFRS. Okay, that govern the preparation and presentation of financial statement in Malaysia. Okay, number 2 is research and development. MASB conducts research on accounting issue and trends to inform the development of the or update standard. Number 3 is review and amend standard. The board regularly review and updates accounting standard to reflect change in the business environment, new accounting issue, or update in IFRS. Okay, number 4 is guidance and interpretation. MASB provides guidance and clarification on interpretation and application of accounting standard to help organizations and accountants apply the rules correctly.
Function of the Companies Commission of Malaysia. The Companies Commission of Malaysia, Suruhanjaya Syarikat Malaysia (SSM), is the regulatory body that oversees companies and business in Malaysia. Its main function include: first, a company registration and incorporation. SSM is responsible for the registration and incorporation of companies, partnership and sole proprietorship, ensuring that business operate legally. Next, business leasing. It administers leasing for specific types of business, ensuring that only company entities are allowed to operate within the market. Last, education and awareness. SSM educates and raises awareness among business interactors and the general public about legal responsibility and corporate governance through seminar, workshop, and publication.
Next, the function of Inland Revenue Board is tax administration. It administers the tax system in Malaysia, ensuring compliance with the Income Tax Act 1967 and other tax laws, including insurance tax, assessment and reforms. Last but not least, the function of Inland Revenue Boards is international tax cooperation. LHDN collaborates with other countries on tax matters, particularly in the areas of double taxation, agreements and information exchange to prevent tax evasion on a global scale.
Okay guys, so here is the importance of source document that used in business. Okay, purchase order, delivery order, invoice, cash bill, credit note, debit note, official receipt, payment voucher, memo, and checkerboard. Okay, here are 10 importance of source document that used in business.
A purchase order is a commercial source document that is issued by a business purchasing department when placing an order with its vendors or supplier. The document indicates the details of the item that are to be purchased, such as the types of goods, quantity, and price. In simple terms, it is the contract drafted by the buyer when purchasing goods from the seller. The importance of purchase orders is cost control, better inventory management, and avoids miscommunication. The first one is cost control. Cost controls helps businesses keep track of their spending by ensuring purchases are pre-approved. Secondly is better inventory management. It can help businesses maintain proper inventory levels. They ensure that what is needed is ordered and that deliveries match the stock requirement. Last but not least is avoid miscommunication. It can provide a clear and formal record of the transaction, reducing the chance of miscommunication or errors related to products, quantities, or prices. A delivery order is a document that can be issued by the owner of freight, consignee, shipper, or a carrier to deliver the goods to another party. A delivery order should be differentiated from the bill of lading. The delivery order is not a negotiable document and it does not act as evidence of receipt of goods. The importance of delivery order are customer satisfaction, inventory control, and efficiency and cost reduction. The first is customer satisfaction. Timely and accurate delivery of orders ensures customer satisfaction, which is critical for retaining clients and building brand loyalty. Next is inventory control. A proper delivery schedule ensures the ability of products for future orders, preventing shortage or overstock situations. Last but not least is efficiency and cost reduction. An optimized delivery order reduces fuel consumption, labor costs, and wear and tear vehicles. It also helps to reduce errors and delays, making the entire process more efficient. Invoice is a document that maintains a record of a transaction between a buyer and seller, such as a paper receipt from a store or an online record from an e-tailer. Invoices are a critical element of accounting internal controls and audits. So the importance of invoice are payment tracking, inventory management, and accounting and tax purposes. The first one is payment tracking. Invoices are essential for tracking payments. They details the amount due, payment terms, and deadlines, helping businesses ensure they receive payment on time. Next is inventory management. For businesses dealing with physical products, invoice help track stock levels and monitor which goods have been sold. last but not least is accounting and tax purposes. Invoices are necessary for proper accounting. They provide a record of income for businesses and are essential for calculating taxes. They can also be used for tax deductions and audit.
Okay, next is cash bill. What is a cash bill? A cash bill is a document receipt of cash payment as opposed to an invoice or promise to pay. The importance of cash bill is customer trust. Okay, what this is, issuing cash bill will customer confidence by showing the transparency in the transaction. It reassures the customer that the business is legitimate and follow proper sales practice. Okay, number 2 is proof of purchase. Okay, what about this? A cash bill provides immediate proof that a customer has purchased good or service. This is crucial for both of the buyer and seller in case of returns, exchange or disputes. Okay, number 3 is financial management. The cash bill assists in tracking daily cash flow, making it easier for business to manage their income and expenses, which is crucial for financial planning. Credit note. A credit note is a commercial document issued by the seller and sent to the buyer when there is a reduction in the amount payable to the seller. The importance of credit note is correction of error. Okay, what about this? A credit note allows business to correct mistakes on invoice, such as overcharge or incorrect quantities, ensuring accurate billing. Number 2 is accounting accuracy. Credit notes are essential for accurate tax reporting. They adjust the amount recorded in sales and purchase tax record, ensuring compliance with tax regulation. Number 3 is refund and returns. When a customer returns good or service is not satisfactory. Okay, a credit note provides a formal record of the adjustment or refund, facilitating the return process. Next is debit note. Okay, what about a debit note? A debit note is a document used by a vendor to inform the buyer of current debt obligation. The debit note can provide information regarding an upcoming invoice or serve as a reminder for fund currently due. Okay, the importance of debit note is adjustment of accounting. It helps adjust the accounts receivable or payable, ensuring that the financial record reflects the correct amount due to owed. Okay, number 2 is financial records. Debit notes are essential for accurate bookkeeping and financial record. They help ensure that transactions are properly recorded and reconciled. Okay, number 3 is customer communication. Okay, issue a debit note provide a clear professional way to communicate adjustment or additional charge to customer, helping maintain transparency.
Official receipt. Official receipt is a record that confirms the completion of a service-related sales transaction. The importance of official receipt. First, proof of payment. An official receipt serves as proof that a payment has been made. It confirms that the buyer has paid for goods or service and the transaction has been complete. Second, dispute resolution. Official receipts are often required by law for tax purposes. They help in reporting income, claiming deduction, and ensuring compliance with tax regulation. Last, record keeping. Receipts are essential for both business and individuals to keep accurate record or transaction. They help track expenses, income, and manage budget. Next is payment voucher. A payment voucher is a record of payment made by a business to supplier for various purchase orders. Payment voucher consists of a purchase order, shipping receipt, and invoice. The importance of payment voucher. First point, expense management. Payment voucher help in categorizing and managing expense, which is essential for financial planning and analysis. Next point, audit trail. They create a clear audit trail which is useful for internal and external audit. This helps verify that payments are legitimate and properly returned. Last, proof of payment. A payment voucher serves as documentation that a payment has been made, providing a formal record of the transaction. Memo. A memo of accounting is a formal document used to communicate and document financial information, decisions, or change within an organization. Is often include details about specific transaction, adjustment, or accounting policies. The importance of memo. First point, effective communication. Memos facilitate clear communication between department and management. They ensure that relevant parties are informed about financial matters, which help in coordinating effort and avoiding misunderstandings. Next point is record keeping. Memos serve as a formal record of financial transaction, decision, and policy change. This documentation is crucial for maintaining accurate financial record and ensuring that important details are not overlooked. Last point, audit trail. Memos create a paper trail that can be used to verify financial transaction and decision. During audit, this trail supports the integrity of financial reporting and helps in identifying and addressing any discrepancies. Check back. A check back is the portion of a check that is written by the issuer for record keeping purpose. The importance of check back. First, verification. The information on the check back can be used to verify that the payment was made for the correct amount and the right party, helping to prevent and resolve discrepancies. Next, documentation. It provides documentation of payment made, which can be useful for tracking expenses, preparing financial statements, and managing budget. Last, audit trail. They create a paper trail that can be reviewed during audit. This helps verify transactions and ensure that financial practices are transparent and accountable.